Take a look at what's been happening with inflation here in the UK. Consumer prices here in the UK for the month of April at 8.7% after a 10.1% rise in March. The consensus has been for an 8.2% print. That's 8.7% in April, the lowest since March 2022, down from a 10.1% print in the prior month. However, still higher than the average expectation of 8.2%. Producer prices 5.4%. The consensus there had been for a 5.9% print, so that's lower than expected. Retail prices coming at 11.4%. We've been looking for 11.1% print on retail prices. Nick Cawley joins us now from Daily FX. Nick, just explain more about this and the importance of this consumer price inflation print this morning for April.
Yeah, morning, Jeremy. It is a very important print. As you said, the expectations for the headline figure that we would go down, would drop the best part of 2 full percentage points down to sort of 8.1, 8.2% level, which didn't happen. Obviously, inflation coming down is good for the consumer, but it's not coming down as fast as anticipated. Food mainly, still driving CPI higher. And if you also look at the core inflation rate, sometimes it's slightly overlooked for the headline figure. The core inflation rate actually rose from a prior 6.2 to 6.8%, which is the highest level since March 1992. So it's getting very sticky, and this is going to weigh on the Bank of England and on their next interest rate decision on June the 22nd.
We've got a chart of sterling dollar up at the moment, currently trading 124.55. What looks to be gains at the moment for sterling, but I think how much of this market really is steered by what's happening with the US dollar and this debt ceiling issue?
Yeah, very much, Jeremy, very much. The US dollar is the main driver of currency pairs across the board. We have in very high short-term US Treasury bill yields, 1-month bill yields at the moment around the 5.8, 5.85%. Near a multi-decade high, and this is supporting the US dollar as people are demanding extra yield, extra premium to hold government debt, short-dated US government debt over this period when the US could potentially default.
Yeah, just going to quickly bring up a chart as well of euro sterling to get a better idea, perhaps maybe away from the dominant dollar. And in fact, it gets a very different sort of picture, doesn't it, with the euro now? I think what we're now at levels not seen since the 15th of December for the euro against what is now a stronger sterling. Yeah,
sterling will get some strength across some currency pairs, as you rightly pointed there. Euro sterling is fading lower and looks to be going lower still. You have other currency pairs, sterling versus the Japanese yen. The Japanese yen is weak. That's going up, continue to go up 172 plus. And as you mentioned earlier, sterling Kiwi could even be a pair to look at if the RBNZ are going to keep rates on hold from now.
Yeah. Okay, Nick, thanks so much indeed. Nick Cawley from Daily FX with a view of the markets in the wake of that print at 8.7% for the consumer price inflation, as Nick was saying, the core number, a little bit concerning as we see a continuation of what is a concerning level of inflation for the Bank of England. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.